Hey, welcome to the 40 Finance channel, everybody. A couple days ago, I did a video on PayPal from my vantage point as a bag holder of PayPal stock, currently holding shares, cost basis of $160. That stock has dropped down into the 60s. And one of the things I highlighted in that video is the 3 and 5 year returns for PayPal. So not just the COVID time, not just the COVID boom and bust, when I got into it, but the 3 and 5 year returns for PayPal are not good either. And those long-term data points brought up a new idea for me, and that is to go back in the US stock market, look back at large and mega cap stocks here in recent history to see what other bag holders are likely out there. Long-term investors who got in early and have since held a stock for 3 to 5 years, and yet they have not seen much in the way of return. And in many cases, at least for the names I'm going to highlight here today, they're looking at negative returns. So if anything else, if you want to commiserate with other bag holders, then I've got a few stocks today that, at least for me, it was surprising to see it through all the data. All right, now jumping in here, if you're curious how I came up with these names, it was through the SeekingAlpha stock screener, super advanced tool. I love to use it. And as I've mentioned here in the past couple weeks, their $99 sale for a 1-year subscription for $99 total, also includes a 7-day free trial on the front end. That is expiring in the next 7 days, I believe on May 22nd. So if you like some of the things that you see here, my affiliate link with that discount is in the comments. Potentially support my channel as well. I really appreciate it. But let me show you how I came up with these different stocks. It's really quite easy with this stock screener. So I have some pre-built screens that I use all the time on this channel, but I use this one here, which is USA large and mega caps. And bottom line is it's just companies in the United States with a market cap of 10 billion or more. So these are big companies, and that's what's really surprising. I'm going to switch over to this here. These are big companies that have failed to produce returns for investors across the past several years. And what you can do on this stock screener, so you see the filters or the tabs up here, you have the summary. We're going to go through to performance, okay? Performance. And you've got several different options. The two columns that I'm focused on is 3-year total return, which is how I built this list, and 5-year total return. That's a little different than 3-year performance and 5-year performance, in the sense that if you have a dividend stock, right, then you're talking about total return with dividends. So a lot of times with dividend investors, you'll hear an argument that says, I own AT&T for the dividend. I don't really care about the stock price. But of course, there's always that flip of a coin, right, where even with the dividend, you're still making negative returns. And now that we have the interest rates heading back up in the world, there comes a point where you have to say, wow, I could have just kept the money in the savings account, right? And just to be clear, I'm not ripping on anybody who owns these names, because I'm holding bags across the board. This is almost like a support group, right? So if you're feeling bad about PayPal like I am, you look at something like this and you say, well, you know what? There's a bunch of other people like me for big name stocks that haven't seen much value over the past several years. Okay, so for this, I sorted by 3-year total return just to give us some names. We're not going to go through all the names, okay? First of all, I only cover stocks that I really feel good, like I know the business model, etc. So it's not really like energy stocks or materials or things like that. I'm mostly technology, consumer discretionary, things like that. So I'm just going to highlight those names. And interestingly enough, I'm not going to cover PayPal on this video because I just did a whole video on PayPal. But if you're curious, 3-year total return on large and mega cap stocks, Zoom is the leader for the least amount of return, or in this case, negative. PayPal's right there at number 2, right? So again, I'm picking out these names here, but I am right on the leaderboard of biggest bag holders across performance of the past 3 years. So Zoom to me is very, very interesting when you think of it on a 5-year horizon, right? Obviously, you had the COVID boom, you had the COVID bust. We can all understand how Zoom would have had a peak and perhaps a trough as well. But at the end of the day, if you bought this stock, this chart anyway goes back to April of 2019, effectively 1 year before COVID. If you bought this stock back then at $63, you are up a couple bucks, but considering the roller coaster ride, it doesn't seem like it was really that great of an investment. And then you start getting into very specific 3 years where, we're in May right now. So if it was May 15th of 2019, the price was $79 and you're at 65 today. That's pretty surprising when you look at Zoom. So this is just a bar chart for revenue, annual revenue since January of 2019. Okay, and then these ones are estimates for 24, 25. I mean, this company's done a lot of good stuff to have their stock price basically treading water. And even on earnings per share, the blue lines, by the way, are the actuals. Okay, so estimates versus actuals. And if you look at 21 and 22, when this one was flying high, they actually beat for January of 23. And next year, though, it is pegged to go down, so maybe it's just lost some momentum. But Zoom to me was pretty surprising to go back to this list and literally be the leader in large and mega cap stocks in the United States, literally the leader in negative 3-year total return minus 60%. All right, next one I'm going to highlight here that fits well into the PayPal theme of the last video, and that is Square, right? And if you think about 2-ish years ago, all the debates, is Square better than PayPal? PayPal better than Square? Cash App, Venmo, all the things, right? Cryptocurrency, blah, blah, blah. You look at Square, 3-year total return minus 26%. Then you break that out further, 5-year total return 1%. And that to me is extremely surprising. So we'll go to this chart on Square. This is the 5-year chart. It looks like it's up a little bit today. So it says plus 3.7. That's because this is a live quote and Square's actually up 2%. But if so, you got in here May 21st-ish of 2018, you bought it for $56. And if you would have walked around the street, let's just say in 2022 or something, and said, yeah, I got in early in Square, $56, I'm holding my shares, $56, and I'm never going to sell them. This company is XYZ, it's going to the moon. You would have looked pretty daggone smart, let's just say in August of 2021, as would I when it comes to PayPal. But ever since then, and the way the market has changed, you're melting down now to a point where you're up 3% for your 5 years. 3% over the past 5 years total, not annual, total. That to me is surprising for Square. Let's take a look at their revenue build. So right, again, 2018, this company made $3 billion, all right? Last year, they did regress from 21 to 22, but you're still talking about $17.5 billion. And the early estimates for 23 and 24 are higher than last year, right? So kind of promising, at least on these charts and the estimates. And then if you get into non-GAAP earnings per share, here you had a company in December of 18 that was, less than 50 cents a share. If they hit analyst estimates, that could be $2.40 for the fiscal year of 2024. But here we are in this crazy market, and a lot of stuff has dropped. Square has been one of them. All right, next up, this one's probably not as surprising because we know what happened to the travel industry, but Carnival Corporation, CCL, very, very popular stock, or certainly was for many years, particularly with the people who go on the cruises. But so I'll say 3-year performance, not super surprising, right? Minus 25%. and that includes total returns because they suspended their dividend. But let's go back 5 years on total return. This goes back to a time period where they were issuing dividends, right? And you've got a 5-year total return of minus 83%. And, I can see how some people would be like, well, that doesn't surprise me. They just got killed with COVID. But if we go to the chart and we do a 10-year, which isn't even available in that previous screen I had there, if you bought Carnival 10 years ago on June of 2013, $33.43. Now this is share price. This doesn't include total return. Needless to say, to wake up 10 years later and be down 20 some bucks per share would be very surprising. Would be very surprising for most people. Now, is there a deal to be had here with CCL? Maybe. It's not one that I'm interested in. I'm not much of a cruise person. However, I can totally see a valid argument for, we finally reached the worst of vacation travel and that world's going to come back. So I would definitely listen to anyone who would want to make a case for that. But even in 2024, estimate-wise, if they hit $23 billion in revenue, they are going to be roughly 10% above what they did in 2019. So then that's 2024, and that's fiscal year, which ends in November of 2024. So you're talking about 16-ish months before you get back to lapping 2019 results. Just a devastating run for this company. And from an earnings per share, you've got even longer to go. All right, at least if you believe in the estimates. So the actual in 2019 was $4.40. Estimate for 2024 fiscal year, 77 cents. I also know that they piled on a ton of debt, so I don't know how they're managing through that, if things are going well or worse, hard to tell. But the bottom line, from illustration purposes, is, 10 years. 5 years at minus 80% means you could have put it under your mattress and done better. So if you're looking for people to sympathize with you, if you're a PayPal guy like me, or you have any other bags, just look at CCL because they got absolutely destroyed. All right, here's Netflix, okay? 3-year total return. They don't have a dividend, so it's going to be the same. Minus 20%, 3-year total return, and then 5-year return is 4%. 5-year total return, 4%, and you're down 20% in the past 3 years. That to me is surprising. There's a lot of love-hate with Netflix out in the consumer world, but from a stock perspective, this company has added millions and millions and millions of users over the past 3 years. Let's look at their revenue chart. And so 3 years ago, roughly December 19, $20 billion or $25 billion in 2020, however you want to look at it. This year's estimate, $33 billion, almost 34, okay? Earnings per share, let me flip this to annual, and this company is actually growing earnings per share at a significant rate if you believe these estimates. Looks like the peak was 2021, where they actually hit 1124. They'll match that in terms of estimates this year, and then from there, they could get back to growth. So depending on your view of Netflix, there could be something here based at least on valuation trends of what people paid for this stock in the past. All right, next up we got Walgreens. And Walgreens is going to be one, it's not necessarily the biggest growth business of all time, but it would be a very common example of one where you might say, you know what, Walgreens, steady, strong, pays a dividend, probably a good investment for 5 years, right? That has not turned out to be true. And as a matter of fact, I'm just going to skip to the 5-year total return. If you bought this a couple years before COVID and took your dividends, minus 41% for Walgreens. Not a good track record. To me, it was surprising. Obviously, pandemic, foot traffic, like I get it. But when you're a pharmacy, you would just figure that there's elements of that wouldn't be as impactful, particularly once they started doing vaccines. I would assume store traffic went up. But let's take a look at their revenue over the past 5 years. Not huge growth. Back in 2018, you had $131.5 billion, okay? This past fiscal year, you got to 132. Next year, you're at 136. So they're definitely adding. I mean, they're so gigantic that adding a percentage or 2 or 3, to the top line is actually pretty good for a company this big. But what about earnings per share? And this is where you start to see maybe where there's negative returns have come in. August 2018, you had a $6 EPS. And then even in COVID times, or let's just skip to 2022, you lost $1 on the EPS. And you were paying out dividends at that time, but this year doesn't look great because you go from 504 to an estimate of 450, and even in 2024, you're going to struggle. At 482, you would not even match what you did in the 2022 down year. So to me, Walgreens, very interesting one to see on a chart, price return of minus 51% over 5 years. To me, that's a little shocking. All right, last one I'm going to highlight today is Disney. And I got to tell you, if somebody, if I met somebody on the street and they said, I'm going to buy 10 shares of Disney for my kids, who are 6 years old because they love the movies, and, hopefully when they get out of high school or whatever it is, they'll be worth more. And I would probably kind of nod along and think, I can't imagine a scenario where that wouldn't happen, if anything else, just for pure inflation on the tourism industry. But if we look at Disney over the past 3 years, total return, now they did suspend their dividend during COVID time, okay? So this one normally paid a small dividend, minus 12% over 3 years. Guys, 5 years pre-pandemic, minus 7.3%. Obviously, the parks have played a huge part. And, for a couple years, you had limited occupancy at the parks, if not closed. And you also have an international company where the China exposure probably comes into play, and China was locked down. But it's crazy to think, if I would have seen you on the street back in 2018, okay, this is a 5-year chart, and you said, I just bought Disney today. It's May of 2018. I just bought Disney today for 102. We wouldn't have been able to project COVID, right? But we also wouldn't have been able to project Disney Plus and all the other things that they've done. And here we sit today, you're actually down. And then let's see on the revenue side, this is where, to me, it gets really interesting. And it is almost, it's tough to swallow from a long-term standpoint. Here's a company, $59 billion in September of 2018, okay, way before COVID. September 2019, you're up to $69 billion and you're humming along. Well, it's not all sour grapes in October of 2022 when you hit $82 billion. All right, so you went from 59 to 82. This is a company that certainly had COVID challenges, but they're making more money today than they made yesterday by a mile. And this year's expected to grow in 2024. Same thing. Now, where we see the problems, earnings per share, way back when, you had $7 per share. This year, on the estimate side, you're at $4, okay? Last year, you did $3.53. This is with the suspension of dividends. This is with likely layoffs that have happened all around. You probably saved some money in the park system somewhere by delaying capital projects, lower staff, etc. but it's not translating to EPS growth on the bottom line, and they're still digging out of it, even now that the pandemic has, for the most part, passed and China's reopened. But even next year, okay, if analysts hit the nail, 535 next year, you're still, whatever, $1.70 off where you were in September 2018. And that's where you get results like this, right? A 5-year standstill. There's a lot of people who own Disney stock. I don't necessarily think Disney stock is a bad stock for the long term. I almost bought it multiple times. Now, ultimately, I didn't, but bad news for me, I made plenty of other horrible picks along the way. But to me, Disney being in this club of 5-year negative total returns, I thought that was very surprising. All right, guys, so that's 5 or 6 stocks there beyond PayPal that have created a fairly sizable list of bag holders across the investing community. Let me know if you're in this little club we have going on. Do you own any of these stocks? Are you a PayPal shareholder? When do you think some of these names will get back into the green for long-term investors? Before you go, don't forget to check out that expiring special offer on Seeking Alpha Premium listed down below. Potentially support my channel as well. Thanks everybody for watching. We'll see you on the next video.